Hey everybody, this is Ray and Andrew with REH CPA. Today we want to talk about Roth IRA withdrawals and how they are taxed. We get this question a lot from our clients. Andrew McMillan, who's here with me today, is going to kind of give us some insight on how that is taxed. Andrew?
Yeah, so any distribution you make from a Roth IRA that is considered qualified.
Qualified being the key term here.
Correct. It would be tax-free. So the next question is, what is a qualified Roth IRA distribution? So it has to meet two rules. One, you have to make it after you're 59 and a half. And you also have to make the distribution, you have to have a Roth account open for at least 5 years. So if you meet those two tests and you pull money out of your Roth IRA, it's typically going to be tax-free.
So what would make it a non-qualified withdrawal?
So a non-qualified withdrawal would be if you pull money out of your Roth IRA before you're 59 and a half. If you do that, then it's typically going to be hit with a 10% penalty on the earnings portion of the Roth IRA. And what I mean by that is, like, when you have a Roth IRA, you're funding that, you're putting money into that Roth IRA with after-tax dollars. So you're not taking a tax deduction when you make contributions to the Roth IRA.
You're creating basis.
You're creating basis. So it's important to know how much basis you have in your Roth IRAs, because when you pull money out, like, as long as you pull out your basis, then it's still a tax-free withdrawal, even if you're less than 59 and a half. So, but if you liquidate a Roth IRA account or pull out more than what you've put into it, you're going to have an earnings portion to that is going to be taxable income to you. That is also going to be subject to the 10% penalty.
Gotcha. So that 10% penalty, is there any exceptions to that?
So there are some exceptions. Some more common ones we see are if you had to pull money out to pay for medical expenses. So if you have medical expenses that exceed 7.5% or 10% of your income, it does change. It varies every year. So if it's of your adjusted gross income, then you can qualify for an exception from this 10% penalty. It's still taxed as ordinary income, but you just can get out of that 10% penalty. There are some exceptions to the 10% penalty. One of them being if you paid for medical expenses that exceed 7.5% or 10% of your adjusted gross income, your AGI.
Depending on the year.
Depending on the year.
It flows between 7.5 and 10%.
It does. That's the reason I only mentioned both of them. I think right now for 2021 it was 7.5%. You also can qualify for an exception if you pay for education costs, like qualified higher education costs. So if you pay for a college, you can avoid the 10% penalty. Another one we see a lot would be if you pull money out to buy a home for your first time home buyer exclusion. If you're buying your first house, you can pull up to $10,000 out to help fund that new home purchase. So those are just a few ways that you can qualify for an exemption from the 10% penalty. So there are a few other ones out there, not quite as common, but if you have any questions on that, we can definitely feel free to give us a call.
Yeah, absolutely. If you're thinking about pulling money out of a Roth IRA, or if you just have questions on how it's taxed and that we didn't cover it in this video, feel free to reach out to us and set up an appointment and we'll help you out. Thank you.